Real estate investing is a great source of income since there are so many opportunities to earn. Some obtain homes to flip, while others invest in long-term rental properties. However, those are not the only methods to profit from real estate. There's also the short-term rental market, which includes Airbnb rental properties. In recent years, more and more people choose Airbnbs instead of traditional hotels when traveling for business or leisure. And savvy real estate investors should take advantage of this trend and invest in Airbnb rentals. Hey, my name is Greg, and today I'm going to show you how to analyze an Airbnb rental market like a professional real estate investor. If you are excited to join the millions of Airbnb hosts to make money from short-term rentals, but feel a little bit lost in your new venture, make sure to listen carefully and to use the information I'm about to give you to your advantage. Buying an Airbnb property and managing an Airbnb business is different from investing in traditional long-term rental properties. But there is one thing which they have in common. The first step to a successful rental business is identifying the best market to invest in. Why? Because location is everything in rental property investing. Location is permanent and cannot be changed, and at the same time, it determines most of the factors that will turn your Airbnb rental property into a success or a failure. So let's take a look at the indicators you need to consider when choosing and analyzing the potential of an Airbnb rental market. You should first start with the city. As a first-time investor, your gut feelings might be telling you to buy an investment property in your own city as you are familiar with the market, the surroundings, and the environment. However, not all cities are created equal when it comes to investing in an Airbnb rental property. What if your local real estate market is too expensive for your budget? What if it is not a popular business or tourist destination? Or what if short-term rentals are illegal? Then you should look for a market away from home, and there's nothing scary about this. Actually, many real estate investors who are now millionaires started out by investing out of state. Since you want to buy a property to rent out on a short-term basis, look for a city or town which attracts a lot of visitors throughout the year. Check out the local economy, the major business establishments, the tourist attractions, and how well connected this city is to the rest of the state, as well as other states. Importantly, find out if there are any big local events, such as festivals, conferences, parades, or anything else that will boost Airbnb occupancy on certain dates. Meanwhile, as a beginner investor, it is good to focus on locations that are in demand year-round. Seasonality is a significant factor in the short-term rental industry, and you don't want to have to deal with a rental that is occupied only a few weeks a year. Vacancy is a major cost for rental property investors, and you want to avoid it. Having said that, just because you are looking for a popular destination to invest in, don't shy away from small towns. Many beginner real estate investors make the rookie mistake of thinking that only big cities like New York, San Francisco, Boston, and Chicago are able to secure high Airbnb occupancy rate and return on investment. To the contrary, our Airbnb data shows that Joshua Tree, a small community in San Bernardino County in California, which hosts only a few thousand residents, has been one of the most profitable locations for short-term rentals in recent years. The next factor that you should consider in your Airbnb rental market analysis is the short-term rental laws and regulations. Before you get hooked on a market, make sure that renting out a non-owner occupied property on a nightly basis is allowed. Check out the exact rules and requirements. Since the tremendous success of the Airbnb platform, many big and small cities introduced various restrictions on short-term rentals in order to protect local communities. So don't make the rookie mistake of investing in a location where Airbnb rentals are not fully legal. You don't want to start your Airbnb businesses on the wrong foot and end up in trouble with the local authorities. Once you make sure that your real estate market allows Airbnb rentals, it is time to focus on the neighborhood. The neighborhood where you buy an Airbnb property is as important as the city. You want to make sure that your Airbnb rental market is attractive for short-term visitors. Check out factors like these: accessibility to public transportation, access to tourist attractions if you target leisure travelers, and access to business spots if you target business travelers, walking distance amenities, nearby dining options including restaurants, bars, and cafes, and local shopping opportunities. Moreover, you should make sure that the neighborhood is safe and has a good reputation. No Airbnb guest will want to stay in an area with above average crime rates. Now that you have chosen a nice area for guests, it's time for your Airbnb rental market analysis to get more quantitative. It's time to run some numbers. At the end of the day, a good Airbnb location is one that brings hosts positive cash flow and good return on investment. To evaluate this, you will need to collect data on existing Airbnb rental properties in the area. To make your market analysis as accurate as possible, you should focus on rentals that are similar to the property that you plan to buy in terms of size, type, number of bedrooms and bathrooms, and available amenities. In real estate investing, those are called rental comps. Evaluating the performance of rentals comparable to the one you want to buy is the best way to estimate what Airbnb daily rate, occupancy rate, rental income, cash flow, cap rate, and cash-on-cash return you can expect from your Airbnb property. Look at the number of available short-term rental properties and their Airbnb occupancy rate to estimate supply and demand. Check out what daily rates local Airbnb businesses are charging. Consider the number of reviews and their average ratings to know what competition you will be facing. Don't forget to predict what monthly costs your short-term rental property will accumulate, such as management, maintenance, cleaning, replacing supplies, and others. Once you have all this data, you can calculate the expected cash-on-cash return and cap rate. These numbers will show you how profitable your Airbnb rental property will be. If you're starting to get a little bit distressed about where you will get all this data and analytics, there is nothing to worry about. Check out the Mashvisor website. We get real-time and historical data from the Airbnb platform to provide you with the readily available analytics of the Airbnb performance of any market in the US. Our heat map will help you identify areas with affordable home prices, high Airbnb occupancy rate, and above average cash-on-cash return. Our neighborhood analysis pages will provide you with all the data and information that you need to decide if an area makes sense for your investment goals. Last but not least, our property search engine will help you shortlist the most lucrative properties in your neighborhood that fit your exact requirements, such as sale price, number of bedrooms and bathrooms, rental income, and expected return on investment. To get a 7-day free trial of our platform, followed by a 15% discount for life, make sure to use the promo code VIDEO, V-I-D-E-O, or follow the link in the description below. So guys, these are the steps that you need to take to analyze an Airbnb rental market like a professional investor with years of experience, even if you're just getting started. And for those who already own a short-term rental property, do you have any other Airbnb tips that you want to share? Please do so in the comments section below. If you enjoyed this video, remember to give it a big thumbs up and don't forget to subscribe to our channel. We'll see you next time.